Thanks, Matt. Hey, everybody. Great to be here. I was listening to some interesting conversations as they shape up. I'll quickly share my screen and, if you can let me know if you can see my screen.
Yeah, we can see it, but it's, I don't know if that's full screen or not.
Is it?
It came up. No, I think this is good. I think this is good.
Okay. So I think, how much time do I have, Matt? Hello, Matt?
Okay. Sorry. 5 to 10 minute presentation, and then we'll do some questions after that. Okay.
Yep. So first of all, thanks for the opportunity. I think I was listening to some of the interesting discussions that we were having. So I'll start. So the idea of Zoth started with an experience me and my co-founder Kaushik had. We used to work at Budweiser, kind of leading fintech ventures there. And, not many people know, as a beer company, we are also provide credit and lending to small and medium businesses across emerging markets. Primarily, small business owners in these markets have huge lack of capital, access to capital. And as large brands, we used to work very closely with them to provide the capital that they need for their needs. For example, buying inventory, buying products and services. And we realize the challenges that these businesses face and the hassle that they go through. Both of us, me and my co-founder, also have been quite active in the DeFi space, and we saw the opportunity that DeFi has, created and is gonna create over the years. However, the DeFi revenue or yield generation is primarily driven by crypto assets and not really linked to a real world income generating assets. So there is a mismatch. There are a lot of demand for DeFi investors across the globe to have access to assets where there is a sustainable yield and sustainable return generation. At the other end, there are significantly small businesses who need access to capital. And that's where Zoth comes in. At Zoth, we primarily are a DeFi lending protocol solving for small and medium businesses for their helping them getting access to capital across the DeFi liquidity. We primarily work as a DeFi lending protocol. We borrow from multiple DeFi investors across the globe, which include stablecoin issuers, hedge funds, etc., and work with our fintech players and partners specifically in markets like India, Nigeria, South Africa, where cost of capital is significantly high, and especially small and medium businesses owners from marginalized communities find it really difficult to borrow there. The biggest challenge, I experienced it personally. Most of them, do not have access to any kind of credit, and they use traditional money lenders who charge interest rates as high as 2% a week, which makes it really difficult for them to earn any sustainable returns on the businesses that do. And that's where the problem that we solve at Zoth. At Zoth, we primarily focus on three categories of lending products. One is invoice discounting, where we work with primarily small businesses, which include exporters who provide services to large businesses. We primarily finance those kind of assets for them. The second is asset leasing. In asset leasing, our focus is primarily on working with manufacturer of vehicles and specifically driving adoption of electric vehicles. Now, traditionally, electric vehicles come at a higher cost than traditional manufacturing of traditional vehicles. And that's where, as Zoth platform, we provide the liquidity that these manufacturers can then deploy these vehicles in fleets for large e-commerce players, as well as uh, um, large fleet operators, enabling not only higher yields for global investors, but more importantly, moving growing economies who currently have low per capita, I would say, consumption to more sustainable sources, and creating, we call it profit with purpose, basically enabling businesses to kind of create a more sustainable impact. And third, we work very closely with brands and consumer goods companies to help their customers or their partners have sustainable livelihoods. We primarily work with brands like Budweiser in countries like India, large e-commerce players like Flipkart, where we help them do their inventory financing for their small and medium partners, and enabling them to kind of sustainable livelihoods, but at the same time also giving superior yields to these businesses. So Zoth works primarily as a DeFi fund. We primarily take DeFi liquidity from in stable coins. We are set up in Wyoming in the US, and we are also have an entity in BVI. Through those entities, we primarily borrow in stable coins, and then through our liquid staking pool and our partnerships across international organizations and partners, we deploy the capital in um, uh, uh, various markets. Our product is primarily targeted currently to our institutions. We are currently starting with an index fund, which primarily focuses on a combination of various such liquidity pools for small and medium business lending. But we gradually will also be working with various other partners, which includes traditional fintech players who would be part of our pool and can use our platform to borrow from the DeFi liquidity that we generate. We have been around for 5 months, and in 5 months, we have partnered with some of the largest liquidity providers. We are in the process of deploying more than $1 million worth of loans, and we are on track to have $20 million worth of stablecoin deployments. We are part of what we call the one of the top 5 DeFi projects in the Polygon ecosystem, one of the leading chains, and we are also working with Stellar, a top USDC stablecoin, primarily driving impact investments across regions. This whole space of private credit is huge. If you are sitting in any developed market, it's very hard to imagine how difficult the life is for a small and medium business to get access to credit. That's what we solve. And in emerging market, this itself is a $5 trillion opportunity. Our core focus areas of SMB lending itself is a $1 trillion opportunity in these markets. And we see a huge opportunity in this space, as we are able to borrow at very low cost of capital, and at the same time we have strong moat in terms of execution capability in these markets, which we play on. Our roadmap is currently focused on borrowing from institutions, but we also plan to launch by September our retail product, primarily targeted towards accredited investors in US and non-accredited investors in other regions. The founding consists of me and Kaushik, both were ex-ABN Bev. We led fintech ventures for Budweiser, creating a profitable and 275 mil AUM company in Africa. Kaushik is a deep scholar with strong tech experience. We also have founding team members like Rachit and Parsha with strong experience from working capital management, product experience, and experts from KPMG and Deloitte in risk management and DeFi experience in our team. And our current partners are across the spectrum. We have institutions who have also invested in us, but we have some of the largest liquidity partners who provide us the liquidity, and at the same time, strong partners in markets like India and Nigeria, where we work very closely to source the right companies whom we fund, and we kind of primarily work on the arbitrage. So that's primarily from our side. We are in process of structuring our raise for the next round. So anybody interested would love to chat, and happy to answer any questions.
All right, Pritam. I'm trying to organize the next speaker here, but yeah. So just a couple things to sort of to recap. Like when you and I, we did a fintech course almost 3 years ago now. And together, and so we've known each other a while. I visited you in India as well, spent a good amount of time. But before that, we discussed a little bit, in terms of like your sort of, motivations with impact investing and sustainability. And you have a young daughter, but you come from more of a traditional business background. You worked with Budweiser. And so can you kind of just tell us a little bit, like what sort of factors have sort of pushed you into the green finance and the sustainability direction, versus maybe the traditional business direction?
So I think, what I strongly believe that, like I have a 4-year-old daughter, and I definitely want to leave a world which is better than what we have today, if not better, at least at the same condition. The challenge, however, is which, as humans, we are very short-sighted, and majority of people prioritize short-term gains over long-term impact. And one of the strong beliefs I has that for impact investments to be successful, they also have to be profitable and comparatively profitable enough for people to be attracted towards it. And that's one of the reasons at Zoth, our focus is very strongly towards electric vehicle financing. So India, for example, is one of the largest polluters in the world, and vehicular pollution is growing at an exponential rate. However, the country is in a midst of transformation. The number of electric vehicles has jumped by more than 300%, primarily driven by low-cost two-wheeler and three-wheelers, which reduces the localized pollution that happens in the country, but at the same time also leaves a better environment for the society. Now, why did an electric vehicle pick up earlier, and why are they picking up now? The primary factor is the total cost of ownership. For a traditional small entrepreneur, owning an electric vehicle was not feasible maybe even a couple of years ago, because the total cost of ownership and the initial investment that required. Now, with the various schemes, which include government subsidies, which include financing from players like us and multiple other players, it is becoming mainstream. And even a small and medium business who is very concerned about their margins are looking at this as an opportunity, where rather than going for an ICE vehicle, because it just makes sense for them from a business perspective, there is low total cost of operation and total cost of running. And finally, they see a long-term value in it. And I think large countries with large populations like India, Nigeria, and China would be one of the largest contributors of climate change even if they reach at least 40% of US levels of consumption per capita. And I think if we do not act now, which is we do not reduce this per capita energy consumption or pollution that gets generated in these countries, now we have a serious problem at hand. And I think that can be only achieved when we bring impact investment or green energy at par with, at least on a total cost of ownership, with traditional investment. And I think through our platform, that's what we are kind of driving. Like all our asset leasing are primarily electric vehicles, which has strong interest from not only global ESG investors, but they are financing the adoption of electric vehicles in most of the emerging markets, enabling transition to a much more greener, smoother ecosystem than what we have today.
Got it. Got it. Yeah. So, yeah, my experience down in India was I'm glad we have some environmental regulations in the U.S. Because without environmental regulations, you really appreciate that they actually, yeah, maybe they're red tape at times, maybe they slow down industry a little bit, maybe they hurt profitability, but they help quality of life. And I think we're, running in the wrong direction with that fast in a lot of places. So it's good to see those electric vehicles get financed. I do remember you telling me that they have like $15,000 EVs, vehicles, not just motorcycles in India.
So we finance $5,000 worth two-wheelers, $2,000 worth two-wheelers, which are primarily used by delivery operators for e-commerce companies, and they are one of the largest polluters currently in Indian roads. We are doing the same in Nigeria with some of the e-commerce players. The cost of vehicle ranges from somewhere between 5,000 to 15,000, and we see this growing at an exponential pace. And that's the space we